Hello dear students, welcome to Click Education. Today we are going to study accounting chapter 6 journal, and this is class number 1. So let's start. So today's contents are journal, features of journal, specimen of journal, factors to be considered for journal, and a practice problem on journal. So we will know first what journal is, then we will know some features of journal, then we will see how does the specimen of journal look like, then we will learn some factors that must be considered for journal, and we will solve a practice problem. Okay. Journal. The primary book of accounts in which the debits and credits of the transactions are analyzed and recorded in chronological order with explanations is called a journal. So, journal is the primary book of accounts where we analyze the debit and credit of the transactions and recorded them in chronological order with some explanations. Okay, so from the definition we can see that the journal has following features. Features of journal: the primary book of accounts. Transactions are recorded after analyzing debit and credit. Transactions are recorded chronologically, and a short explanation is given for generalizing every transaction. That means for every transaction you have to write a short explanation that will be act as a future reference for that particular transaction. Okay, and finally number 5, journal helps to record the principal book ledger. Ledger is the principal book of accounts, and it is written on the basis of journal. So journal helps to record the principal book, and we will study more about ledger or detail of ledger in the chapter 7. So I'm not going to discuss it in detail here. Okay, so let's move on to the next section. Specimen of journal. So now we will see the specimen of journal where we will record our transactions to journalize them. So here is the specimen of journal. You can see that there are 5 columns, and they are date, number 1, particulars and account title or accounts titles and explanation, number 2, and ledger folio, 3, debit taka column number 4, and credit taka column number 5. So you have to remember that in the specimen of journal there are 5 columns: 1, date; 2, particulars or account titles and explanation; number 3, ledger folio; and 4 and 5 are debit taka and credit taka respectively. So you can write here the date, let's say 2019 January 1. So you can write here the titles and account titles and explanation. You can you have to write here the ledger folio. This is actually code number which will provide the service of future reference. So 101, let's say, and you can write here amount of the transaction, 5,000 taka debit and 5,000 taka credit. Just right here. So this is the procedure how to record journal entries. So we will solve this type of maths in future. Okay, so factors to be considered for journal. There are some factors that must be considered while recording journal entries, otherwise you will not be able to solve or record them. So let's know the factors. Okay, number 1, all the assets that are brought by the business owner to the business collectively form the capital of their business or capital of that business. That means there must be some assets that will be brought by the owner to start the business, and the formula is all the assets collectively will form the capital of that business. So we can write all assets account debit, all capital accounts credit. So all assets account debit and capital accounts credit. So let's take an example that will clear the idea or concept. Okay, so example, Mr. Ashik started his business with cash taka 50,000 and furniture oath taka 30,000. So here you can see Mr. Ashik started business with cash. So this is an asset and the other asset is the furniture. So these two collectively will form the capital of his business. So he brought two types of assets. One is cash and the other is furniture, and the third accounts will be capital. So let's see the solution. So cash account debit, furniture account debit, and capital account credit. So according to our formula, all assets must be debited. So these are the assets and they are debited, and the sum of these assets equals the amount of capital. So they collectively form the capital account, and capital account must be credited. Okay, understood? All right. Number 2. Here, number 2, no accounts will be opened under the name goods or materials. That means we cannot write, or we will never write any accounts name goods or material. You have to remember this. We cannot write this as an account name. Okay, so there are some rules regarding this facts. So let's say them. For goods purchased, you have to write purchase account. For goods purchased, you have to write purchase account, and for goods sold, you have to write sales account. You cannot write goods, you cannot write goods, you cannot write materials. You have to write purchase for purchased and sales for sold. Okay, so let's take an example. Goods purchased from Mr. Rafiq by cash taka 15,000. So goods purchased, we cannot write goods account, so we have to write purchase account. And since goods are purchased by cash, so the other account is cash account. So let's solution of the problem. So the solution is purchase account debit, cash account credit. Since we cannot write goods account though, so we have to write purchase account, and as we purchase the goods by cash, so the other account is cash, and cash is credited because we made payment through cash. So the journal is purchase account debit 15,000, cash account credit 15,000. Okay. Number 3, no accounts will be opened under the name check. So we cannot write any account as a name check also. Besides goods and materials, besides goods and materials, we cannot write any account named check. So the rule is, or the formula is, you have to write bank account. You have to write bank account. Bank account will be written instead of check. So you cannot write check account, rather you have to write bank account. Okay, have a look at this example. Have a look at this formula. For check payment, you have to write bank account credit. For check payment, remember this very carefully. For check payment, you have to bank account credit. you have to credit bank account. You have to credit bank account. And for check received, when we will receive the check, you have to debit the bank account. You have to debit the bank account. You have to debit the bank account for check received. Okay, so remember this very carefully. For check payment, you have to write bank account credit, and for check received, you have to write bank account debit. Other accounts, you are already known about the fact that what accounts you have to write against these accounts. Okay, so let's take an example. Goods sold to Mr. Akash by check, taka 80,000. That means you sold goods and received check. That means you sold goods and received check. Okay, here we cannot write any accounts under name goods and under name check. So we know for check received, you have to write bank account credit, debit. For check received, you have to write bank account debit. So the journal is bank account debit, sales account credit. Since since goods are sold to Mr. Akash, so sales is a revenue account, you have to credit sales account, and for receiving check, you have to debit bank account. And here is the journal for this particular transaction. Understood? Okay. So number 4a, when goods bought and sold on credit is mentioned in the transaction. So here the fact is, if it is mentioned in the transaction that goods bought and sold on credit, then you have to follow the following rules. For credit purchase, you have to credit creditors. For credit purchase, you have to credit purchase. When it is credit purchase, you have to credit creditors. You have to credit creditors. And when it is credit sales, you have to debit. When it is credit sales, you have to debit debtors. You have to debit debtors. So the rule is, for credit purchase, you have to write credit. You have to credit creditors, and for credit sale, you have to debit debtors. Look at this example. Okay, purchase goods on credit for taka 12,000. So purchasing of goods on credit is mentioned here. So you have to credit creditors for credit purchase, and the other account is purchase account, and which will be debited. So the transaction as journal is, so the journal is purchase account debit, creditors account credit. Here purchase in an expense account, so purchase is debited, and we know already that for credit purchase you have to credit creditors account. So here the journal is purchase account debit, creditors account credit. And what about credit sale? Look this. So goods sold on credit. So goods sold on credit is mentioned here. So for selling goods on credit, you have to debit debtors. For selling goods on credit, you have to debit debtors. And for sales account, you have to write sales account credit. You have to write sales account credit, because sales account is a revenue account. Okay, so here is the journal. Debtors account debit, sales account credit. Debtors account debit, sales account credit. For credit sales, you have to write debtors account debit, and for sales, you have to write sales account credit. Okay, all right. So factor number 4b, if name of the seller and buyer respectively for goods purchase and goods sale are mentioned, then it will also be considered as credit transaction. So when in a transaction the seller and buyer's name are written or mentioned, then you have to consider that transaction as a credit transaction. Okay, so mentioning of name of the buyer or the seller will direct you to the consideration of credit transaction. But there is a another rule, that is, but besides name. That means if mention is name is mentioned, if name is mentioned and these words also mentioned in that particular transaction, such as cash, check or bank, then there is no scope for considering credit transaction. So they will not be considered as credit transaction. Okay, listen carefully again. When the name of the seller and buyer is mentioned in a transaction, then you have to consider that transaction as a credit transaction. But both name and these words are mentioned at a time, or both in a transaction, then you have to prioritize these words, and you have to ignore the name. So there will be no scope for credit consideration. You have to consider them as cash transaction or bank transaction, etc. Okay, so here is the transaction: goods purchased from Jamil Traders for taka 30,000. In this transaction, there is no mention of check, cash or bank. Rather, there is mention a name, Jamil Traders. Name Jamil Traders. So this is the mention of seller of the goods, because I purchased goods from Jamil Traders. So seller of the goods is mentioned. In this case, you have to consider this as credit transaction. You have to consider this as credit transaction because name of the seller is mentioned and there is no mention of these words. Okay, so the journal is purchase account debit, creditors account credit, because we know for credit purchase you have to credit creditors, for credit purchase you have to credit creditors. Okay, and as usual, purchase account debit. Okay, let's take another example. Goods purchased from Jamil Traders by cash. Same transaction, same wordings, but by cash is added in this transaction. So besides name, cash word is mentioned here. So you cannot consider this as credit transaction. You cannot consider this as credit transaction because cash is mentioned here. You have to ignore this name for this time. Okay, so now you cannot consider this name. You must consider this name by cash. So the transaction is so the journal is purchase account debit, cash account credit. Because of mention of cash, this word cash, creditors is replaced by cash. Creditors is replaced, the word creditors is replaced by cash because of mention of the word cash. I think now it is clear to you that how to consider credit transaction and how to select or decide the transaction is cash transaction or bank transaction or check transaction, and journalize the transaction accordingly. Okay. Factor number 5, for purchase return and sales return. Now this is time for starting or learning journal entries regarding purchase return and sales return. That means purchase return means you purchased goods sometimes ago, and now you are returning those goods because of some reasons. Either it is low quality or not according to your expectation. Similarly, your customer can return your goods because of that was not your not their according to their expectation, or because of any other faults in the goods. So for purchase return and sales return, you have to consider that the previous transaction was credit transaction. For here, consider that the purchase and sale had made earlier on credit. Please follow this factor very carefully. Most of the students maximum time mistake regarding this transaction, and the fact is, for purchase return and sales return, you have to consider that the past or earlier transaction was made on credit, and you have to journalize the transaction accordingly. So here the rule is, let's take this example: sales return taka 5,000 or returns inward. Okay, please note this word very carefully: return inward. Return inward means sales return. And let me illustrate the concept. Consider this is your business and here is your customer. So you sold goods, and for some reasons your customer didn't like that goods and returned it to your business. So your goods flowed in to your business. So this is inward. Okay, so that means you sold goods and your customer returned them, and your goods inflowed into your business. So that's why returns inward is considered as sales return. Returns inward is considered as sales return. So here you have to consider the earlier transaction as an credit transaction. So let's say solution for this, here earlier and now. So earlier for this transaction you considered the transaction and credit transaction. So the transaction was goods sold on credit taka 20,000. Before this return, goods was sold on credit taka 20,000. Then you journalized this transaction as debtors account debit and sales account credit. Now because of this return, you have to credit these debtors. And instead of sales, you have to debit sales return. Let's see. Now you have to journalize this transaction as sales return. Instead of sales, you have to write sales return account debit. This is the contra account. You have to remember this. Sales return is a contra account of sales account. Sales return account is a contra account of sales account. So because since sales account is credit, sales return account must be debited. And since your customer returned the goods, so it will reduce debtors. So debtors account credit. Understood? I repeat that for sales return you have to consider that this is returns inward. That means your customer returned your goods for some defects or any other reasons. So for generalize the transaction, you have to debit sales return and you have to credit debtors. Okay, all right. So practice problem. Now we will practice this problem, and here is the transactions.